is rallying up, and NASDAQ, the the Russell ended closing down and getting a lower high again off of this trend line of resistance that I've drawn here at this dotted line right here. Again, you've got this rising wedge. You rose back up. You got a black candlestick previously. You got a topping tail over here with the doji, and I talked about that the very day that doji happened. I told you I thought we were likely peaking into this resistance level. But I want to show you this chart again. I posted it on social media. I showed it in the video briefly. But I think, again, you're getting a lower high here, and S&P made a higher high. You're diverging, and that's exactly what's happening between the Dow and the transports, and that happens at turning points. So, again, going to be looking for the rising wedge to play out. The Dow has a rising wedge, massive one in the weekly time frame. But, again, this could be a huge warning sign. The Russell's not moving to a new high. They're diverging. It's diverging with the S&P 500. Maybe it still goes to a new high with the Fed, and you get a divergence in the more recent price action. You do have a divergence already with this peak. Do we confirm a lower high and diverge with the S&P? I'll be watching. To make a new high on the Russell or not, I'll be watching. Now, not only is the Russell diverging with the S&P 500, it often forms at turning points. It doesn't always play out that way, but sometimes it does form that way. But you do have a Dow theory reversal signal been setting up here. I've been watching this for a while. When we saw the Dow break to new highs, I told you to keep your eye on the trend line here. I've drawn a parallel boundary to this lower boundary right here. They often diverge. Down at the April low, the transports made a new low. The Dow made a higher low. And the transports right now hasn't been able to go above that peak. We've actually saw the transports peak back in 2021. Haven't been able to make a new high, but yet the Dow has made new highs. And right here in the most recent price action, we have the transports getting a lower high and the Dow making a higher high. This is a Dow theory reversal signal. The principle of confirmation, one of the tenets of Dow theory, says that the transports and the Dow need to confirm each other. Dow makes new highs, the transports need to confirm it. Is it not making long-term new highs with the Dow, with the transports, as the Dow is? But also, here in the most recent price action, the Dow has made a new high up into this upper end of this channel in the more recent price action from the 2022 low. This is the channel. I've just drawn a parallel boundary from here, connecting these lows, 2022, 2023, 2025. That's all I've done. I'm showing you a video, in this video, the longer term channel of the Dow that we're seeing in that longer term time frame. This is just from the 2022 low. So it's a channel of interest to me, and you're forming a divergence. This is a bearish signal, a bearish sign that a reversal is about to happen. Russell's diverging with the S&P. The Dow is diverging with the transports. Huge red flag. The Dow was up today. The transports was slightly higher, but had a rally and it fizzled out. The weekly chart right here. Now, while the stock market was up today, so was the VIX. It rose by nearly 4%. The VIX, the stochastic on the S&P 500 is at an extreme, and you'll probably see it roll over with the Fed or just after the Fed or something, but it could roll over tomorrow if we sell off and we peak today. But the stochastic on the VIX is at extremes. You're probably going to see this turn back up. I've warned about this again over and over again that VIX is warning something's going to happen. I think you're going to get, I think is what the VIX is warning is we're going to get the bear market to kick off we're going to get the crash to kick off the bear market. There it is. As the market begins to price in the recession. And again, you're now forming a bullish falling wedge and you're attempting to break out of that today. You're just below the 50 level here, just below the 50 period moving average. When you get back above it, volatility is going to start increasing. This looks very, very similar to what happened in February. February, we had volatility surge above the 50 period moving average. Here with the VIX, we pushed back below the 50 period moving average. You formed a bullish falling wedge. You ended up trying to get back. You tried to get back above the MACD. Here we're still above it into positive territory. Back at the MACD in positive territory, I should say. You ended up going negative. Then you got a bullish cross. If we get a bullish cross firming up here, very similar to what we had over here, as we drop below it and then get right back above it, you can see this bullish falling wedge really begin to take off. That candlestick, another Hollow red candlestick yesterday, as I pointed out, you get this bullish falling wedge. So I think you're going to see a surge in volatility, probably a pullback, and then again, it gets something like this. I think you're going to see a surge in volatility and then see some kind of attempted rally, probably a larger counter trend at some point, and then I think you're going to see 20% or greater move. And I think it's going to be about 27, 28, 29, 30% going back down towards the April lows. I think you're forming a massive head and shoulders. Showing you the head and shoulders on the S&P. If we can get back above the 50 period, then bad things are going to start happening on the S&P. This volatility just led to a pullback. It's likely setting up for something bigger like over here. Volatility just began to surge. That happened. We saw the S&P in the lower window here with that surge above the 50. We saw the S&P get a leg down and then a rebound with the pullback to the 50 and the 200, and then another leg down. It ended up dropping 21%. I think you'll get a bigger drop than 21% with this next leg down. I think it will be a bigger drop to kick off the bear market. Look at the Bollinger Band. Okay, the market rallied. We're rallying into major resistance. We've got 9 counts everywhere in the daily time frame. Dow was up 168 points. You got a Dow theory reversal signal with the transports. The S&P was up 0.23%. Again, we didn't close at the highs. We got a candle of indecision, a black candlestick in the form of a spinning top, up 15, almost 16 points. The NASDAQ was up 0.80%, pardon me, up 190 points. The Russell was down. The Russell diverging now with the S&P 500. That's a huge red flag, just like the Dow and the transports. The VIX was up 4%. The VIX breaking out of a bullish falling wedge today. The VIX sending all kinds of warning signs that volatility is about to increase. We're just below the 50-period moving average. Stochastics at extremes. I think you're going to get a Fed sell-off. Maybe that comes a Fed day. Maybe it's a post-Fed sell-off Thursday or Friday. My guess is, though, you got a pretty good shot we're going to peak this week. And I think there's a good chance that we peaked today with the candles of indecision if they act as reversal bars at major resistance. There are 9 counts, and with the VIX attempting to break out. Last week when we moved above the October 9th high, get a double top or with that peak on Friday, or you might try to peak this week with the Fed. Historically, 2007, we got a peak with the Fed and we sold off. Show you that in a moment. I think Powell, I think we're going to get a quarter point cut out of the Fed. I think the Fed is going to be very concerned about the labor market. I think the Fed is going to be very concerned about the government shutdown. As I continue to predict since October 14th, I believe the government shutdown is going to go longer than everybody thinks. I think it'll be the longest government shutdown in history. I think it's going to go 5, 6 to 8 weeks, something like that. In all likelihood, it might even go longer into 10 or 12 weeks, but I think it's going to be around 5 to 8 weeks or so, somewhere in there. Here we are on day 28. We're already seeing warning signs of recession. The government shutdown could be the final nail in the coffin that gets us there. It's purposely being done to try to cause a recession. I think it's likely going to work. I think Powell's going to show concerns about the government shutdown. I think he's going to show concerns about the labor market. Now, we don't have the jobs report, but again, when we get it, it's probably going to be a negative number. We're seeing rapid deterioration in the labor market, and I think that is what the Fed is going to show concerns about tomorrow. We're also going to get the end of quantitative tightening. Now, we have warnings. So warning sign number 1, the Fed has started cutting rates. Means we're likely getting very close to the recession. Warning sign number 2, it's going to happen tomorrow. In all likelihood, the Fed is going to announce an end of quantitative tightening. I predicted that was coming. I told you it was coming when we had the last meeting. I told you they're going to end up ending quantitative tightening. Why? Because recession is coming, and eventually they're going to start QE. Herd believes that's bullish. It's going to, the herd believes the rate cuts, I should say, are bullish. They're bearish. Eventually, the Fed's going to do QE again, but we're going to have the bear market. The QE will come later. But right now, they're going to end quantitative tightening. That's a huge red flag. You should be paying attention. Oh, they're going to end quantitative tightening. They've started rate cuts. Recession must be getting very, very close. As the Fed starts doing these things, the stock market will peak and begin to crash to kick off the bear market, pricing in the recession. That's the way it works. There are huge red flags, but people aren't paying attention, and you have a lot of people that have never seen a bear market, traditional markets, or even with crypto, and they just saw what happened in 2020 and 2021. The rate cuts are going to be associated with the coming economic downturn and the recession, and the stock market will begin to price that in, and so will Bitcoin. Bitcoin has already topped. The stock market is likely topping and very well could top this week. I think you got a good shot at top today. Turn off the resistance levels I'm showing you in this video. Watch the video all the way through. Important stuff. Me carefully. Again, when we had the 2007 top, when the rate cuts started, and again, like I said, they've really just started. Powell cut right before the election, and then he stopped. Now in September, on September 17, 2025, he started. Here we got it on September 18th. You went up to a new high and a sell-off. Now, peak 17 sessions later. Right now, we've gone longer than that. It's not playing out the exact same way, but it is similar. History doesn't always repeat, but it often rhymes, as they say. So again, here, by the time we got the October cut, October 31st, 2007, that marked a market peak. We peaked with that and reversed. So again, I think you've got a good shot that we either peak today or we'll peak tomorrow. I think there's a very good shot that you top today on the S&P 500, that we put in a top. We're at major resistance, and we got a candle of indecision above the upper Bollinger Band. We're stretched. We completed a 9 count. VIX is trying to break out here. Bullish falling wedge. That led to a sell-off, quarter point cut. Then we rallied up off the 400 period moving average. You went back to the 50 period after breaking it, and the Fed did the December meeting, and that led to another lower high highlighted here, both of those. And I think you're going to see something very similar to that. Now, we've done it differently. Here we peaked October 11th. Our previous peak was October 9th. We actually made a new high, but I think that so again, it's playing out a little bit different, but I think it's going to be similar and rhyme, as I've said. I think with the October cut, you're going to see a sell-off. And again, Powell's going to say, but I think he's going to be concerned about the economy. I think he's going to be concerned about the government shutdown. And I think whether it's something that is in the Fed statement showing concern, or Powell, or both, I think the market's going to sell off on it. Maybe there's another catalyst or multiple catalysts. But here, historically, in 2007, we saw sell-off. And I think you're going to get 2 more cuts out of the Fed. I think there'll be quarter points like they were over here. And then I think you're going to start seeing the market collapse into December or January. Go forward, as I said over the weekend, if we go forward 10 weeks, you're into January, and that's where I think we're going to get the emergency cuts. I think the recession will start in December or January, and I think you're going to collapse like we did here. We collapsed 20.5%, and then the Fed did jumbo cuts. On the bottom, did another cut here. They did an emergency meeting with the 0.5%. They did another one a week later, week and a half later. Talked about that over the weekend. The market collapsed some more, going down, taking out that low, and then they did a massive jumbo cut, and it moved back, and I don't have all the data here, but it moved back, because I've got my notes, it moved back to the 200 period for a test, and then the bottom fell out of the stock market, and we would later in the year get the Lehman moment and the collapse in September. This kicked off the bear market. You got a crash. Crashes kick off the bear market as it begins to price in the recession. Warning signs. But you have complacency reigning supreme. People lulled into a false sense of security. Well, it hasn't happened yet, so it's not going to happen. People were saying that at the October 6th top for Bitcoin. I was warning that Bitcoin was slamming into major resistance, and I actually called the top with Bitcoin. That top played out. Our October 9th top did not play out on the S&P 500. And again, usually Bitcoin peaks, and a few weeks later, you have market peaks. So I did warn of that back at the time, that we still may try to go to a new high. I told you I thought there was a good chance that could have been a peak on the October 9th peak on the S&P 500, but we've exceeded it. So again, Bitcoin, a huge warning sign. But then Bitcoin collapsed 18%. There was a flash crash move on Bitcoin, and it was the biggest liquidation in history. It wiped out all the leveraged traders in one big swoop. Now there's a lot of money in crypto. They can't push it back up because that money's been wiped out. A lot of it anyways. These leveraged, over leveraged traders. Just telling you, again, I expect that we're going to see sell-offs with the Fed First cut, we rallied up to new high. We've done that. I think that the next cuts are going to be associated with sell-offs until the Fed panics. We get a cut. An emergency meeting, I think, is going to happen in December or January. My guess is it's going to be in January. I'm looking at the sell-offs in past market tops where it goes, 10, 14 weeks. Here it was 14 weeks before the Fed panicked. It'd be a huge red flag to you that rate cuts have started because they're going to be, and now the herd, oh no, we're going to the moon. Now we're going to really get going with the rate cuts. And again, rate cuts are going to be associated with the bear market and the coming recession. That's why I'm telling you, I am believing and thinking it's probably going to show up as it did. It showed up in December of 2007. And then by January of 2008, the Fed was cutting. And again, our September cut here in 2007, our September cut now in 2025. We're about to get the October cut. We'll see if we sell off with it like we did. I think that you will. I'm saying I think we very well will see a stock market top this week, and it could happen today or tomorrow, and I think there's a very good chance it happened today with the candle of indecision, major resistance. We'll see. Just be aware of this. This is the S&P 500 in 2007, the top and the first rate cut and the rate cuts that followed and the crash to kick off the bear market. This is what happened the last stock market top. This divergence right here. It's a 5-minute chart, but I was watching this closely. We got it on the 15-minute chart, divergence as well, into major resistance. The divergence in the 5-minute and 15-minute chart, they could just be short-term price fluctuations. Bigger divergences on the daily chart and the weekly chart, which again we have in the daily time frame. That's why I'm looking for an entry point on these intraday charts. No idea if that'll play out. It can easily be stopped out of the trade, but again, to the trade going into the highs there, I attempted an aggressive short and market turned down with the divergences that I saw forming as I was thinking. I don't know if it'll play out, but that's what I'm doing. I'm a trader. I try to take positions, but I could get stopped out. But again, in my thinking, climbing into major resistance and getting a lot of warning signs. Here it is on the 50-minute chart. And again, I could be wrong about this. I'm telling you what I think. I think that you got a good shot. We've topped today at resistance, and if we didn't do it with the Fed or at some point this week, but I think you got a good shot. We've got the top here ahead of the Fed. 2007, we went higher in the October meeting, and then we turned. May see that happen. My guess is you're going to see a sell-off with the Fed, and I think you got a good shot at it that we peaked today. Go back and fill some of these gaps. This is the divergence I was watching here on the 15-minute chart. The divergence down here on the MACD. So just showing you this, and why I want to show you this chart is because again we gapped higher, and we went back and we filled the gap back on the 5-minute chart here, and then we went higher, and then we came back and we closed below where we opened, and that gave us a candlestick. And that gave us a candle of indecision in the daily time frame. Slightly overthrowing this trend line from the July peak back over here. We have this trend line. I showed you this yesterday. And again, you've got this massive multiple point divergence here. I think you're going to end up turning down and end up coming back and collapsing back to the April lower, maybe just above it or just below it. But I think you're forming a massive head and shoulders. I think Bitcoin is doing the same thing. I think you've got a massive head and shoulders that could be forming. And then I think the Fed will cut over here in December or January. And so it may, if we go into January, it may be a little bit more of a different angle of descent. But I think you're going to get a massive rally. And that rally, if the Fed cuts here in December or January, as I'm expecting and predicting, got these divergences here. And now you have divergences in those intraday time frames. Don't have one on the 60-minute chart. You don't need one, but you still may get it. I'm saying we still may go higher with the Fed, but I think you got a good shot or candle of indecision. Let me show you this up close, though. We just slightly overthrowing this level from the trend line there from July, connecting these previous highs. And if I bring it up close here, you can see it. And again, we're just overthrowing that trend line from the July peak. The candle today was a black candlestick, a spinning top candle of indecision. And it very well could mark a top. Black candlesticks often do. Now, maybe they don't. Maybe we gap higher with the Fed and get a bearish engulfing or something like that. So now you have a possible evening star, an evening star 3-day pattern. You have a wide range body with the gap higher, then you get a candle of indecision above the upper Bollinger Band here. If you get a red bar tomorrow with the Fed turning, we can make our way back down and fill some of these gaps. And then you have a shot at having a 3-day evening star pattern giving us a head formation, and you do have a possible head and shoulders formation here. Talked about a smaller one here with this being the head. If our October 9th high held, we pushed above that on Friday, and I told you on Friday with pushing above that, that triggered stops. Sometimes with the double top, you'll go higher and then turn. The risk is that we form a larger head and shoulders, and here a head and shoulders is forming, and we've got multiple point divergences here. So we'll be watching major resistance in the weekly time frames. Look for a close below the upper Bollinger Band here on the S&P daily chart. The stochastic, it's up here at extremes. I expect it's going to end up rolling over with the Fed, and if you see it roll over, it could get a red bar tomorrow with the Fed. We'll be watching to see if today's high does hold. And if it does hold, then you could be turning off major resistance, and you've got a really good shot that the market is topping today, or you do go a little higher at some point this week. You're at major resistance in the monthly time frame, major resistance in the weekly time frame. Had this reversal happened back over here on October 9th, I told you the bar was never confirmed. We never got a confirmation. We never got a follow through. Talked about the risk of going to a higher high if that failed to get confirmed. It failed to get confirmed. Signals reverted back to bullish last Monday on some indicators last Monday, and then on Friday on others with the breakout for the S&P 500. Now you've got this gap higher. Again, possible head and shoulders. Watching what becomes of this candle. Warning signs and 9 counts are being developed today. Bitcoin is backtesting this trend line from the April low. Got a topping tail yesterday. It looks like it might confirm it today. Still might reach the 61.8 Fibonacci. Didn't quite reach it, but it's turning here off of that, just under that level, just over a 50% retracement, forming a bear flag. Even if it goes higher, likely going to establish a lower high, but you've got a bear flag. I think Bitcoin's topped over here. Said so at the time. That top played out. We went higher than the October 9th. Bitcoin peaked over here October 6th. We went higher than the October 9th on S&P and October 10th on NASDAQ. Likely going to top right behind Bitcoin. Bitcoin peaks first. With this back test of this trend line, you're getting a 9 count on Bitcoin. My latest Bitcoin at the end of this video. I'll link it from earlier today. At that trend line, Bitcoin is getting a 9 count. Now, if it gets an aggressive sell, maybe it doesn't complete it if it closes below the bar from 4 bars ago, but it looks like it's going to complete it. And it's turning off the 50-period moving average. We had a 9 count here. It didn't quite complete, but that's when I called the top. I got a boatload of sell signals on the 6th, 7th, and 8th Bitcoin. But you're getting a 9 count on Bitcoin with establishing a lower high. It's likely to come down here and take out Bitcoin's average price and the 50-week moving average and collapse. Bitcoin peaked in 2021. It dropped 52% in about 10 and a half weeks, along with the NASDAQ collapsing and the S&P pulling off. It's our head and shoulders pattern on the S&P, and as we've come up to resistance, you're getting that 9 count, getting that candle of indecision. We got the 9-13-9 reversal pattern. This is a bearish pattern. A 9-13 followed by another 9 is a reversal pattern. And again, if you come down here, you can come down to the 50 and still set up a right shoulder. Whether the pattern plays out or not, we'll see. Sometimes they do, sometimes they don't. But you got a good shot. The market's peaking today. We're getting this candle of indecision right into resistance, and you're getting the 9 count. We had the 9 counts in the weekly time frame. That gave us the October 6th high. Right after that 9 count, that was a resistance, including the shadow low from the April low. If we exclude that level, then you're again up at this resistance, the resistance we're hitting at this week. Again, I'll show you that weekly chart, but you have a 13 last week, so you have a 9-13. What the candlestick looks like by the end of the week here. A Fed sell-off, as I think we're going to, or some other catalyst this week, combination of things. I think over the next 10 to 14 weeks, you're headed back to the April lows or close to them. I think you'll get a 20% or greater sell-off. Dow slamming up into its longer-term channel, getting a 9 count, forming a Dow theory sell signal with the transports. A 9 count today. Again, here a possible gravestone doji on the Dow here in the daily time frame. possible head and shoulders as well. Whoops, didn't draw that very straight. A possible head and shoulders here as well if we move back down. Dow weekly chart just slightly overthrowing the channel a little bit here, the upper boundary from this high right here and this high over here in 2024. Drawn a parallel boundary with the 2020 low, so just a trend line that I'm watching. If we take the trend line from these lows in 2023 and 2023 here and 2025, excluding the shadow, you've got a rising wedge on the Dow that again could be a major reversal pattern as we're getting that 9 count into this area. So just be aware of that. And the NASDAQ getting a spinning top today as well. The NASDAQ got a 9 count at ahead of the October 10th peak. It peaked the day after the S&P 500. Here we now have another count. Sometimes you go a little higher with the counts. And again, you're major resistance, but it's certainly possible. Above these upper Bollinger Bands, I'll be looking for a close back below them, but another 9 count here. And again, these counts have led to pullbacks throughout the uptrend since April, but we've not seen a reversal setting that up. And again, here a possible massive head and shoulders top. Again, breaking above the 2 new highs there on Friday, gapping higher Monday, gapping higher Tuesday. Again, being above that upper band, you're going to see close back below the upper Bollinger Bands soon. I bring it up here on the NASDAQ, you can see where we jumped above that upper band here. And again, when we close back below it, you'll likely see a pullback or a reversal. If we pull back, you could still get a divergence on the 60-minute charts and get something like that and go higher. We'll be watching, see what happens at these major levels of resistance. But you're getting these 9 counts. You've overthrown the upper boundary. Overthrown the upper boundary of the broadening formation. That doesn't disqualify it. I talked about this channel on the NASDAQ. Same thing with the S&P. Again, with these trend lines, sometimes you include the wicks, sometimes you don't. Depends on how it plays out. But right here, this was excluding that wick from 2021. And we were, again, first just under it and then right at it. Now we're overthrowing it a little bit. If we include the wick, well, then we're right at it. Let's take a look. Now here it is. If we exclude the wick on it right here, and I've talked about this earlier, and here if we go over to 2021, you can see I'm excluding the wick right here. What happens if we include it? Let's see where we're at. This trend line hold, and we end up reversing off of it by the end of the week. But let's push it up and see what happens. Push it up. That looks pretty close to me. I just pushed it up here. What do you think? It looks pretty close. Let's take a look now. Include the shadow here from November of 2021, the top there. Let's see where we're at. Oh, we're still slightly overthrowing it, it looks like, but right into that level. So I'm going to keep it like that, but I think that you have a top developing with this channel right here. Now, again, this is a parallel boundary up here from this high, drawing a parallel boundary from the low here from 2018 and 2020. Very similar to the channel that I have with the S&P 500. But right here, we're just slightly overthrowing that. If we include the wick, you're just a little bit closer to it, just slightly overthrowing it. This is a channel I'm paying very close attention to in the weekly time frame here for the NASDAQ. And I still think the broadening formation plays out, may even evolve into more of a head and shoulders type looking pattern we'll be watching. I think that's what the S&P will end up doing. Just pay attention to these channels in the weekly time frame. That's why I'm saying you have a good shot of a top this week with the Fed. Historically, that's what we did in 2007 when the rate cuts started. And a sell off with the rate cuts. You got to pop higher to new highs, and then you began to sell off. After the September cut, market didn't bottom until we got the jumbo cuts in January of 2008. I think you're going to see something very similar to that. Here's a weekly chart. Now, let me say this again. In hindsight, channels are easier to draw because you can see what happened. I don't have a reversal here yet. And you never know, okay, are we going to include the shadows, exclude the shadows for the channel to look proper? And again, some channels include the wicks, others don't. Now, I've made changes to this channel. I was excluding the upper wick here like on NASDAQ. I've got it to the high of the wick now. A little tiny topping tail there. I've excluded the wicks down here from 2022 and 2025. And if you connect the 2020 low to the 2022 low, to the 2025 low, excluding the shadows. Again, excluding the shadows in 2022, 2025 were there. If you include, and we've slightly overthrown that trend line, slightly overthrown the trend line in 2023 here, playing around with it. Channel is easier, the channels are easier to draw after they complete. Doing what I just did with the NASDAQ, including the shadow here and excluding the shadow in 2025 completely and in 2022. And that's where we're at right here in 2025 in October, the end of October. Still have the channel still slamming potentially into resistance. Now remember, I was including the shadow down here from the 2025 low and just taking it from 2020 to the 2025 low. That's where we were slamming into it at the October 9th level. I told you there was still wiggle room to go higher if we did not see that validate reversal. We never did. Remember that reversal bar that we got when Trump announced the tariffs, 100% tariffs on China? Never got confirmation to it. Never got a follow through. Including the shadow, that's where this channel was. Now I'm excluding the shadow, and that's where price is up here. The parallel boundary is drawn, including the shadow up here. So we'll see what happens. Really nice looking channel. That is one of the frustrating things about channels is they can be drawn different ways, excluding or including the shadow wicks. And so we just simply don't know. That's why it's better and much easier to draw them after they complete. So I'm still playing with that and still qualifies as a nice looking channel. But again, could we be peaking here? Channel is still intact, slightly overthrowing the trend line from the 2023 low right here in the weekly time frame and hitting that right on the pretty much right on the nose here. We still let me bring it up closer here so we can see. Well, yeah, right on the nose. It looks like right on the nose right there. Look at that. Wow. That is excluding the wicks down below and including the wick from the peak there in 2022. Previously, I included this wick down here. And that was right where we turned off of resistance right there on the October 9th peak. Again, you got a good chance we're going to turn off of this area this week. Maybe we peak today with our candles of indecision, with the VIX, with the 9 counts. I think you got a good shot we peak today. You may do it tomorrow, but I'll be watching this trend line. Do we overthrow it a little bit? Do we our candle of indecision on the S&P begin to the spinning top candlestick begin to turn and produce a reversal here in the daily time frame. Our daily chart here, this is that weekly chart that we're looking at on the S&P 500. One other thing is, again, I just want to continue to say, and you can see it in the weekly time frame. I've showed you in the daily. I think you're forming a head and shoulders pattern. I think you're going to come back down to the trend line or down to horizontal support. And then I think you're going to go up and get a right shoulder. I think you got a good shot of that. The head and shoulders pattern could take us down to test the 2020 low and either get a higher low above it or take it out, as I've talked about. I talked about that in great length and detail over the weekend.